Hey, Peter.
Hi, Scott.
How are
Everything
you?
fine?
Yeah, everything's good, actually. Well, actually, I've got the flu today.
Ah,
My wife had the flu earlier this week, and she was telling me, "Don't kiss me, don't come near me. I don't want you to get it." I'm like, "No, don't be stupid. That's ridiculous." And now I've got it.
that's the price of love, Scott.
Yes, it is.
You always pay price for it.
I share everything. Yeah. How are
Yeah.
you?
I'm fine. I'm fine. I have to work quite hard this week.
Mhm.
Thank God, only in the afternoon, so we can trade.
Yeah.
Um, and I have to travel a lot. So busy traffic. It's stressful. The Dutch traffic is crazy. Well, probably in Bangkok it's even worse. But
Traffic is crazy. Even with the
yeah,
bushfires and public transport, and
well, I have too many things to carry with me to take public transport. It's okay, public transport, but it's slow, and I have to carry lots of bags with me because I also give martial arts training in companies, and I let people fight with boxing gloves on, so to let them
really,
discover
I
how
didn't know
they
you
deal.
were in this role.
Yeah, 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 yeah. I
What
don't
time
have
do you?
really. I don't have really much experience in martial arts. I did some Aikido and some Tai Chi, and but it's great fun to do it that way in companies. Let people play and work out, and yeah. So that's why I have to carry all those boxing gloves with me. I need a guard.
That's great.
Yeah,
All right. Did you want to look at Euro USD? Is that what you wanted to trade?
yeah. Let me share my screen because I already have a setup.
All right, share away. Right, we have a setup, and that will probably be built.
Yeah,
The Euro's been fantastic all day on the. Is this a 5 or a 10-minute chart?
10.
Yeah, I traded it with Richard from the open this morning, and it was very nice.
Yeah, I've had a look also this earlier this morning, and this was a nice
Mhm.
move. Very
He caught
tradable.
he caught the move down and that inside period at the lows, and yeah,
Yeah,
and so you see when you have a kickoff where we've got a long string of bars with an unbroken low at the very start, that's usually a sign that you can expect a second leg up. When you
okay.
see that, you expect a second leg.
Yeah, and it hasn't been a second leg, or was this a second leg?
That is a second leg.
Okay. This
Yeah,
then?
so you should be filled short now, right?
Yeah, I'm filled short.
Yeah. Now, how is this feeling now? It's looking close and perfect.
It's feeling good. I'm more and more relaxed to
Mhm.
trade. I also practice with being both long and short, and just left it as it is. When both entry prices were hit, I just left it, and it worked out fine. Of course, as you said. Um, so I'm getting more and more familiar with it,
Mhm.
also with the difficult situations, and that's what I'm hoping to experience now in the coming days as well. That I can handle all the situations.
So this is an interesting thing, and I'm going to actually use this recording in the webinar on Thursday. We're at an advanced stage of knowledge where you can recognize the setups, you can fill out the spreadsheets, your position sizing is right, the trade execution is perfect. What we're looking for now is what Richard called the corner cases, like the edge cases where things are very marginal, so that we've sort of war gamed out every single possible iteration of things that can go wrong, which
Yeah,
for
yeah,
me, that takes the stress away. The stress comes from, oh, I haven't seen this before, I don't know what to do. But if you've seen it before and you know what to do, it's like, okay, if I'm in a trade that I shouldn't be in, the rule is just jump out immediately. If I'm not in a trade that I should be in, I should jump in if I can get in with no slippage. And if not, then I need to make a decision.
yeah, yeah. Right.
So can you,
Okay.
so can you explain the setup that we've just taken and where we're at on this?
Yeah, I have one more question, but I will first explain the setup we're in. We are in a short setup. We had a retest variation sell and also a gap open sell.
Mm-hmm.
So we are in P1 of our short trade.
Mm-hmm.
And it's looking good. ISL quite far away, first target as well, but this is what it is. The question. Yesterday, I will remove the vertical line. What was the...
You have a retest concept by 4 bars from the lows.
No, that was not a question. I had a fake out. Let's put it in words. I had a fake out sell.
Mm-hmm.
Then, oh yeah, it was here. I had a fake out sell. Then the next bar first went over that bar high and then went down. And what I did was I canceled the trade, and because it went over the fake out level, but then it went down and took the trade. So what should I have done?
Okay, so this is a very interesting corner case, and the logical thing you should do is you want a place for your stop loss where where institutional traders are going to be placing their stop loss. So the rationale is that they will do the defending for you. So if it actually gets above this high, it's probably a trade you don't want to be in. So if you didn't notice it, it would be perfectly acceptable to leave it, in which case you would be forced to leave your stop at the green bar high. But if you notice it would be better to reduce your position size, re-enter it in the spreadsheet, and take the ultimate intrabar high as your stop. So you've done it perfectly. If you notice it and you're noticing it in real time, that's the ideal way to do it. But sometimes it might not be time to do that. It might literally spring up for 2 seconds and then straight back down. And you don't want to be canceling before, because that move up and then straight back down is in the nature of a fake out itself. That really is catching traders going the wrong way.
Mm-hmm. Right, clear answer. Yeah.
We go back to this is interesting because I love to see more of these corner edge cases.
Mm-hmm. Yeah.
Okay, so can you explain where we're at in this setup? We finished our first period.
Yeah, we finished our first period. ISL held a 1 hour target not hit. We have a new bar, 9 minutes left. We have a gap open buy in any case.
But you're not trading with gaps as part of your system, are you?
Yeah, okay. I thought when I have no setups and I'm left without any.
We're bending the rules.
I take the discretionary, but I won't, Scott. Don't worry.
So you're taking a new trade when you're bored. That's an interesting thing.
No, don't worry. I won't. I will skip the gap opens. Yeah.
Okay, which brings us to another interesting point. When you first started trading this system, you were trading just the inside bars. You're trading just the inside periods. And then you moved on to the full system, and then you dropped it back to a subset of the system after experiencing the pros and cons of both approaches. So you're trading, about 2/3 of the full system now?
Yeah, I skipped the gap opens and also the failed hammers and failed shooting stars. But yesterday I thought maybe I should take them as well, the failed hammers and failed shooting stars. What do you think?
Okay, so failed hammers and failed shooting stars and gap opens are an extremely strong edge. The problem in having too many different setups is the weird interaction between them all gives you some sort of luck involved. And so if you're taking more setups and those setups are an edge, then yes, it works in your favor. But the downside of that is that luck works both ways. So if you're trading a system to build skill, it's one thing. If you're trading a system as I'm going to earn my living from this system, you want it fairly simple and robust, because the more complicated a system is, the more perfect it's going to work on its best day and the more it's going to suck on its worst.
Yeah.
So if I'm saying I have to pay my rent every week with this system, I really want something that's just average all the time, rather than something that's amazing on 3 or 4 days a month. That's my personal preference.
Yeah, I agree with that. So let's skip the gap opens and the failed hammers, failed shooting stars, and just stick to the subset.
You could just as easily build a system around failed hammers and gap opens. Those are certainly some of the strongest edges in the system, viewed by themselves. And the weakest edge in the system is the inside period, and it produces very, very respectable results by itself.
Yeah. Yeah, I noticed that I'm especially focused on the insides after a fake out and double insides.
Double insides are very strong,
Yeah.
And fake out insides. A fake out where the fake out is a shooting star is especially strong. Insides in a trending market are also very strong. Like you can see at the end of that first up move off the lows, there was a little red inside period that worked quite well. Where inside periods do not work is in the middle of trading ranges. They tend to suck. And in low volatility environments, they tend to be prone to whipsaw. Now, the fear in running an inside period is when it's both a long and a short setup. So the fear is that you're going to be stopped. You're going to be put into a long setup, and then that's not going to work. And then you're going to be put into a short setup, and that's not.
Yeah,
so,
I always have that uncomfortable feeling. Yeah,
everyone does, and it's not for nothing. Like that can easily happen. So, in your experience so far, how often does that actually happen?
Once.
Out of hundreds and hundreds of trades.
Yeah.
So it doesn't happen.
Hundreds, yeah, a couple of hundreds. Yeah.
Yeah. So the lesson is it doesn't happen nearly as much as what we thought it was going to happen, right? So human beings are just terrible at figuring out risk. Like, we're afraid of sharks and we're not afraid of taxis.
Yeah.
Which one's more likely to kill you?
Yeah. Yeah.
Okay, so we're coming up to the end of the next period.
Yeah.
And what setups are we likely to have? If that closes as a hammer, you do have a buy setup and you do have a sell setup.
Yeah, if it closes as a hammer. Yeah, and we take the failed hammers?
You're not, but
yeah. So I don't have new setups then, but we would have a failed hammer sell setup.
You have 2 buy setups. What are they?
2 buy setups when it is a hammer.
And don't make you look bad.
Yeah, well, we have this gap open, which I don't trade, but...
No, you have 2 that you are trading.
Oh, wait, the connection is back, thank God. We have 2 buy setups, you say. I don't see a fake out.
Don't have a fake out? You have 1 of the retest setups.
We have a retest concept.
You do,
buy?
You do, and you also have a retest. You don't have a retest concept buy because we're more than 5 bars away.
Okay.
So you do have a retest bar. We have a move up from the lows to the highs for 3 bars, and we have a move down for 4 bars, ending in a hammer.
What?
So we have a retest of those ones, which is a very good setup to take.
Sorry, Scott, I don't see the retest variation buy.
It's not a retest variation buy, it's a retest. So.
Right. Yeah.
You got it now?
Yeah, I have it.
You want to explain it?
We have a retest buy. No, I still don't see it.
Okay. So go back to the lows just before 7 o'clock. We have
I'm here. Yeah.
We have a movement up from that low to the next high.
It's here, yeah.
For 3 bars, excluding the spike low and the spike low.
Yeah, I see it. Yeah.
Okay, now we have a movement down from there for 1, 2, 3, 4 bars, ending in a hammer.
I see, yeah.
Okay. So you need to work out the position size. It's also a trend trade buy.
Yeah. And this one was as well. Yeah, okay. I will work out the long setup.
Yep, work out the long setup, and
Yes.
and let's get ready to place that.
6.4. And the ISL is 114,311. 5.3 pips of risk. I still do it with the baby pips calculator because the spreadsheet doesn't work.
I prefer the baby bit calculator.
Yeah. 7, 8. Okay, let's see.
Okay, when does the bar roll over?
1 minute to go. Retest. Buy. One minute to go, so I'll wait a bit more.
Mm-hmm. That's looking like a very strong buy setup. So are you feeling, when you first started, I know you felt a lot of sort of angst about the fact that you are short and now you've got a buy setup that you have to take.
Yeah.
And everyone feels that, right?
Yeah, I guess so. Well, it's much less now because I've seen this morning that it works out well.
And it just sort of grinds it away, right? Like it's not.
Yeah.
Up to the 100th time, it's not something that you're going to try and second guess.
No.
And I don't know about you, but for me, there's no substitute for just grinding it out that way. Like, there's no one. I could have read it in a book 1,000 times, but until I'd experienced it for myself, that it's all going to work out. Relax.
Yeah. Right.
Relax. You know, it'll go up or it'll go down.
Yeah.
You know.
Yeah, you don't have to do anything also about the spreadsheet or in the charts, or it's just you have placed it, and then you have to wait how it develops.
Okay, so we have that buy order placed, and we are short, and this is period 3 of our short. So it's unlikely that we make 1R on our short. How is the process of exiting at period 3 close, mate? Is that becoming stressful, or was that stressful, or is it?
No, not yet. It becomes stressful once I have this long setup, which is coming up right now. Mm-hmm. So I should have ended the short trade at P3 at the close.
No, we're not at P3 yet.
One.
This is the third bar.
Yeah.
So when this one finishes the third bar, that's the close.
Yeah. Yeah. And then it's stressful for me because when we're long, we have this switch of quantities, mm-hmm. and I don't know what I should how I should end that trade.
Okay, so to end the trade, you look at, if you're ending a short trade, you look at your short stop loss. So the easiest way is to visually go to where your short stop loss point is and move across, and your buy order is for 1,166,000. That's the quick way that you work out how much you have to market exit. So you have to market sell as close as you can, 1,166,000.
Yeah, I have to close this one. That's what you mean.
Correct.
Okay.
So you have to both kill that order, but you have to market sell that amount. So you just read the amount off and just enter that in.
Okay, I'm not sure I understand you, Scott, but let's.
Okay, so on the left-hand side, your stop loss order is k.stp 1,166,000.
Right.
So to exit that trade, you do two things. One is you kill your stop loss. The second thing you do is market buy 1,166,000. because that will exit the position that you're in, because that's the size of the position that you're in. But because you are both long and short simultaneously, it can tie your heads in knots. So right now you are short 1,078,000 and you are long 1,166,000. So if you look at your actual position, where does it tell you what your position is?
Here.
Your position is negative 88,000.
Yeah.
Which is, if you look at that, you're just going to tie your head in knots and get confused. It's just easier to ignore.
Yeah. And the hard thing is then to place a buy market order at with this amount. So I have to place a new order then.
Yes.
So first kill the stop loss, and then place the buy market order.
I would do the buy market order first, but we're a minute to go or something like that?
No, we have 5 minutes to go.
Oh, okay.
Even more.
Okay. So the volatility profile for this looks very healthy for your system.
Mm-hmm.
Are you starting to get a sense of when you're likely to have a strong edge and when you're likely to not have a strong edge?
Yeah, what I said, the double inside periods in the beginning, after a fake out or fake out inside periods, are a strong edge. Also, the gap opens at the beginning of a move, of a trend. That's not it's not a practical edge, but it's a sign that it will take off.
Mm-hmm.
I think those are the most obvious ones for me.
For me, it's the idea that when we get down to the dregs of low volatility time, and it's still falling until that reaches an extreme, that's unlikely to be good take for this particular system.
Yeah. And I always see in the morning when I start at 7 or something, that's a good time to start. It's volatility is rising.
It's very reliable in currencies.
Yeah.
And it's kind of baked in the SPY, which is why that's in index futures, because at the very nature, what is volatility but a recognition of people getting excited and emotive, and there's nothing that stimulates our emotions like a market opening that's been closed overnight. You know, it's in our very human nature. Ooh, it's open now. What do we buy? What do we sell? It's on. You know, so we have an interesting corner case here. It's with 4 minutes to go. It may actually hit your stop loss before the P3 exit. So you're in a situation where if you cancelled your order, you could be making a mistake here. So you want to leave that stop loss on right until the very last minute, hit your market buy, and then immediately go and cancel that order.
Yeah, the last sentence I didn't really hear, Scott.
So if you cancel the stop loss order before you hit the market buy, you could potentially make a mistake. So I would do it the other way around. I would hit the market buy order and then as soon as that's accepted, immediately cancel the stop loss.
Yeah.
And you just want to keep in front of mind that there's the potential for something to go wrong in that operation. So if something goes wrong, and for instance, you market exit the position and then your stop loss is hit, even though you're no longer in a position, you're short an extra position, you would immediately fix that problem as quick as you can just by market buying that same amount. But you'd market buy 1.166.
And it's better to do it without brackets, eh?
For sure.
2 minutes to go. Nearly hits the stop loss.
It's actually better for you if it hits the stop loss.
Yeah, it does. Yeah.
Okay, so you've had a 1R loss on your short, but your long is performing quite well and is about to hit a 1R target.
Yeah, well, I didn't really adjust it to the 1R, so I will now. We were talking 114.311, and I should also 114.
Up.
Let's see. It's 114.311. So yeah, we hit it already, and now we have.
So was it my imagination, or did you have that placed incorrectly and still haven't hit the target, even though the target was a little too far?
It was a little too far, but it was also the complete amount. So we're out of our trade altogether.
Okay. So that's a good point to point out. There's a mistake that actually made you money, which is entirely possible. Right?
Yeah, but still a mistake.
Still a mistake.
Yeah, and that's the thing. I should. Yes, it's a dilemma for me because it's so useful to talk and to have all these discussions. I learned so much from it. But
that one was my fault. Okay, so now we're in the situation where you should be long half a position, but you're not.
Yeah.
So you should immediately get long that half a position if you can do it without too much slippage.
Yeah.
So 1166. Yeah. What about 2?
I think 550, something like that.
Yeah, that's good enough. Okay, now you can get back in. So just get back in.
Yeah, I'll place it with brackets.
No. Yeah, it doesn't matter. Okay, so you've got back in at a better price, so your mistake actually made you money. Now, this is a really important thing that this is going to happen from time to time, and you need to have a set procedure. You know, like when a pilot, something goes wrong with the plane, they don't just sit there going, what the hell's wrong? They test this engine, they test that engine, they do a checklist, they go through, am I not in a trade that I should be in? What do I do? I just get back in as long as I can do it without costing myself money. If I can't get back in without costing myself money, I need to look at how much money it's costing me and make a decision. Is it okay to give away 2 pips of slippage? If you're trading on a daily chart with 100 tick stop loss, yeah, it's totally fine. It's nothing. If you're trading on a 5-minute chart with a 5 pip stop loss, is it okay to give 2 pips away? No, certainly not. You can't give away. If your edge is 0.2R, you can't give away 0.4R.
Understand, yeah. And actually, my stop loss should be higher.
You don't need the target because you no longer have a target.
Yeah, you're right.
The stop loss should be a break even.
I will only have a stop order.
Yep.
And put it at break even now?
Break even now, correct.
So that would be...
Lower, there.
6.4, yeah. Okay. So we are long with half the position size. We were stopped out of our short trade. And we have a fake out, actually, which is unlikely to be filled, but still.
In the real world, would you place that fake out?
No, I would wait.
Okay, now, here's how you know when that particular shape of bar is called the promise of higher highs. It's not something I've discussed with you before. It's a bar with open at the lows, close at the highs, expanded range. That bar is something like a 92% chance of having its high broken in the next 3 bars. So it's an extremely low probability outcome for it to break the low of that bar unless it first breaks the high. If it first breaks the high, then you are unnoticed that perhaps it will reverse high. But If it's like it is now, the odds are extremely strong that this is just profit taking after a big up.
Okay, that's good to know. Yeah. I will have time afterwards, after our session, Scott, to trade a bit more. Maybe I should tape it and send it to you.
Please. Based on what I'm seeing now, I think we're not that far from where we want to be.
Yeah.
A small, you know, part of it is this is because I'm yakking at you and
yeah, and also these corner cases.
yeah, but the corner cases are things you need to know. That's what I'm here for.
Yeah. Yeah. Yesterday it was tape that was only difficult in the beginning, but I had the feeling I didn't make any mistake. I only had that question of the fake out sell, which I asked you. And so I have the feeling that overall I can do it. With some corner cases, when I'm in doubt what to do, and when I'm alone, I think the execution is on an acceptable level. But I still want to prove to myself that I can make not more than one mistake in 20 trades.
Your execution's getting better all the time.
So 5 minutes left. We have a retest if it's like this.
Mm-hmm. Would you take that additional text set up in the same direction? So explain that it's a retest and it's also an inside period.
Yeah, it's also an inside period. Here, there we have a spike low. Here we have a spike high, and here we have the actual setup, which is also an inside bar. So we would have an additional long setup of
Correct.
Sorry.
Correct.
Yeah, of 550,000 and a short setup of I don't know what, but we should do the math. And
are you feeling any how would you feel if it was indeed a short setup and that short setup was triggered, wiping out some of your profit and getting you short at the same time as being long?
I would feel tricked.
Yeah. So a useful guide is if you feel tricked, you're probably not the only one. You know what I mean?
Yeah.
If you're long, you're feeling good about long, it's logical to be going long. That's a chart that I want to be long. And then a short setup triggers, you're not the only one who's going to be feeling butthurt. You know, other people are also going to be feeling it.
Yeah, so it makes it less probable.
It makes it less probable, but if it happens, it's something that you want to be on. You don't want to be slow to recognize that your dick is shutting the car door. You want to know ahead of everyone else. You know?
Yeah. So we do place the short setup as well.
Absolutely. It's highly unlikely to be triggered.
Okay, I will do the math for the short setup. And the low of this bar is 114.39. The high of this bar is 114.434. Risk 3.9 pips. I'll first place the additional long setup. 2 minutes to go. We are at an important level here.
That is a very interesting thing.
Yeah, I wouldn't be surprised if it goes down. So it is important to have that short setup.
Okay, but what, 3 minutes to go?
2.5, yeah. Actually, when I see this, Scott, I wouldn't place that additional long setup. Well, of course we have to, it's the rules, but I'm not that confident about that long setup.
Really?
It doesn't matter.
This is true. It does not matter. Let's have a look. Yeah, it's easy, isn't it? That's a yeah, that's an important movement.
I will first place the short setup.
So that could that move up could be vacuuming to the top of the trading.
Mm-hmm.
That would be textbook vacuum to the top of the trading.
Yeah.
Okay, so you've got to. So this short setup is going to be a bitch to place in time. So you have to get that. The short set. So another thing that you've been coming into in these corner cases is which one you place first.
Yeah.
And for me, this one 100 times out of 100, you place the short.
Yeah. $60.95.
Okay, and you also need to adjust your stop on the existing trade, right? So which order do you do that in? Do you place the order, then adjust the stop? Do you...
Yeah, I first place the order and then adjust the stop.
Correct.
28 seconds.
All right.
And the stop, I wouldn't place it under that long bullish bar. I would place it halfway or 25%.
Your stop loss on your existing long?
Yeah.
I would place it at the inside period bar low.
Okay. Yeah.
Okay. You can probably place that order and then move that stop up. Okay.
Let's see. That's this one.
Yep. Nicely done.
Okay. So we're still long, half the position. We have a short setup, inside period short.
I wouldn't be surprised if this is an inside period, a double inside period RTV sell, which is an extremely high probability setup in the time.
Uh-huh.
Too early to say that.
And would you place the additional long setup?
Absolutely.
Okay.
Double insides, yeah. Double calls.
Without the brackets? Would you place it at market or above that?
No. You have to place it above the bar.
Sorry? Up.
The order has to be placed above the inside period bar. The bar is an incomplete bar.
Yeah, so that's what I did. No, I thought maybe at market, but...
So the correct way to view a test of a previous spike high is like a test. It's literally pass or fail. So a close above that big green bar high is extremely bullish, and we're almost certainly going to get further bullish action after that. A close below is implicit rejection of that new level, which makes it likely to be forming a trading range and at the top of the trading range. So then it becomes this perfect place to short in a trading range is somewhere near the top. So it becomes a self-fulfilling prophecy where, hey, it looks like a trading range now, and we're at the top of the trading range, so we better short it, and it goes down because people start shorting. So it's literally one that the future is not set. It could go either way.
Right. Yeah, so I placed an additional long order, but I didn't place an extra stop loss, so I should adjust the stop loss as well, huh?
Not there. No, wrong place.
Yeah, but this is the existing one. I can just...
Yeah, it should be at the low of the red bar.
Yeah, it is at the low of the red bar, but it's only 550.
Okay.
And I should make it 1100.
Don't you have two stop losses there? You have two separate orders. You have one for 11439 and you have one for 1465. I think you're correct already.
No, because this 1465 is the short order.
Okay, that's the short order.
So now I have a position of long position of 550,000 with a stop loss at the low of that previous bar.
Okay, that's correct. Then.
And I have an additional long position at 550,000 without a stop loss.
No, but it hasn't been triggered yet.
No. Okay, I can wait till it's triggered. Something happened here. We are short.
Okay, so it triggered you out of your long, you're into the short. The position is negative 1465. So you are short. Your stop loss needs to be cancelled for the 550,000. You need to adjust the size on your target down to half of 1465, and you need to place your stop loss a tick above the highs. It's a bit far away. But you've got plenty of time to do that, so there's no harm in that.
732. Okay, and we place this stop loss here. So we have a fill of 114,394. Our ISL is 114,439.
And what did you make on the long trade that you closed out for a profit? Would have been about 0.75 hours, something like that.
What I see here is I have a loss of 115 euros.
No, you couldn't because you got long from the hammer at the lows.
Yeah, of course. Yeah.
Partial profits, and you stopped out at about half an hour on the second part of the trade.
Yeah, well, my spreadsheet doesn't. That's one of the things. My spreadsheet doesn't give R values. It's still not working well, so I can't see it.
I'll get Daniel on something.
Yeah, I sent him a mail already.
Okay.
Yeah.
I'll put that down.
Okay.
So even though you're not trading gaps, that looks like a small gap down.
Yeah. It's not a double inside period, but it is a retest. Probably. Maybe.
Okay, 3 minutes to go. What are we likely to have?
Yeah, a little bit less. We are likely to have a reset of the shot clock when the next bar breaks that bar low. We don't have an inside period, so we have P1 of our short trade. ISL not hit, 1R not hit. I don't see any new setups. Let's see. Well, I have no gaps, no hammers, and shooting stars traded, so...
If you did, you would be preparing to go long on a break of that bar.
I would prepare to go long at the break of that high?
Yeah, if you were trading those, which you know.
Yeah.
I think it's far more likely to fall.
Yeah, I think too. Actually, it's a retest, this bar.
The retest concept, and
Yeah.
if it's a growth, then it's a retest variation.
Yeah. So 1 minute to go.
Nothing really to do, right? Like
No.
you're just in place. If it breaks that bar low, it's going to reset the shot clock. Easy rollover.
Yeah, for a change.
So overall, it's this weird combination of boredom and like frantic activity and hyper stress, right?
Right, and that's the reason why I was thinking about going back to the gap opens and the hammers and the shooting stars, just to keep up that that feeling of stress and just to keep on going.
The boredom is a part of it too. Like have you ever noticed that the times that markets take off are the times when we're not paying attention to them, and the markets that take off are the markets which have gotten so boring that you've just given up following.
Yeah, and they surprise you. New bar.
Like gold broke out again a couple of days ago after 20 days of doing nothing.
Yeah.
And just when you get so bored with it that you feel like not checking it anymore. And equities are kind of in that situation right now too.
They get you bored, or they've broken out.
Frustrated is probably more accurate than bored. Like, come on, do something. Hurry up, do something.
Yeah.
Okay, so our shot clock is reset.
Right.
Back to bar one of our 3 bars to make one up.
Yeah. Yeah, the hard thing is here to not follow your expectations, but follow the rules. So you have to place the non-obvious long or short orders anyway.
Do you think there's any way that you could have just like read a set of rules and just done that? Like you could have read it 100 times and still not be able to do it.
Yeah.
You just have to do enough of it that you get sick of breaking the rules and feeling like an idiot.
Yeah. Yeah, and I notice that I still have those thoughts, but it's not very probable that it breaks this low or high. So should I? Yes, you should.
Well, sometimes it's just a waste of your time and effort, but most of the time you should.
Yeah, but you can tell out of experience, and I cannot yet. Okay. It's into gear.
All right, you might want to check that 1 hour target is right, because that doesn't look right to me.
It's not right. I can see it eyeballing. 114.356.
Yeah.
I'm not sure if this is correct, actually. Doesn't look like it.
No, that looks right to me.
No,
Oh
because
no, slightly wrong. Slightly wrong. Should be like 680, 690, something like that.
Yeah. Let's see. I think this should be it. 394, 645. 94. This is correct.
As long as you're staying relatively focused and not distracted, you have enough time and space to pick up all these things. I think you could probably do this on a 5-minute chart. I think you probably.
Scott, do you want to torture me or what?
It would put you under a lot of pressure. I wouldn't like to see you do it for real money, but.
Okay, I can try. Why not? I have some time left after our call, so I can try it on the 5 minutes. Why not? Or do you want to switch to 5 minutes now? Is that what you mean?
No, let's leave it on 10 for now. You're doing very well. But I think we should try one day at 5 minutes in the future to see if you can.
Yeah.
Because 5 minutes is dramatically harder than 10 minutes.
Yeah, we could take something in between, but it's.
No, it wouldn't work right.
Okay. Yeah, I will practice in the 5 minute charts and I will tape it. I will send it to you. Yes, yesterday evening I was thinking, is this maybe also a good system to try for real and also backtest it and after this program?
It's a very good system to try for real if you trade it only, and I mean only, in a rising volatility off the low base environment.
Yeah.
If you wake up, check the euro US dollar and check that it's going to suit your system, absolutely. And as long as you have the discipline to say, nah, let's not go fishing for that, do something else. And usually what you feel when that happens is that your subconscious really, really wants to trade, like desperately wants to do it, but just let me have at it. So you counteract it by, when you take days off trading, you pick your most childish favorite fun things. You go eat an ice cream in a park. You leave your phone at home and go sit on the beach by yourself. Like I like to go to a fancy French restaurant and eat a 3-course lunch reading a book by myself. I do all the stuff that's like treat stuff on the days that you're forced to take off trading.
Good idea. Yeah.
One of the only edges you have as a home trader is the ability to not trade. You can't go into your job if you work as an institutional trader and say, yeah, fuck these markets today, I'm just not doing shit. You can't. You're going to get fired very quickly. But you can't go to your boss and say, I don't really like the look at this. This looks like really difficult trade. He's just going to say, shut up and do your job. But you have that freedom. You'd be crazy to give away what is one of the only advantages that you have. Everything else is stacked away against you.
Yeah. And would it be also a good idea, Scott, when you've made your X pips of profit in the day, to stop, or just say, okay, I have half an hour left, chart's looking good, I feel good, let's continue?
Okay, for a start, people who think in terms of I need to make 200 pips, 100 pips, are all idiots. Start to finish fuckheads, because that's not taking into account how big your stop loss is. If you want to make 100 pips a day, stick 1,000 pips stop loss on. You make 100 pips a day, guaranteed.
Yeah, I know that you would say that, but I also know what you advise. But continue, yeah, please.
It's okay to make an R target if you know that. It's okay. It's probably not best practice, because what you're going to see is that it's like anything else, 20% of your days account for 80% of your profits. Like most things, like 20% of your customers are 80% of your business. And so you're going to have a couple of good days a month that if you can really put the foot to the floor, you can really make, especially trend days, you can really make a lot of money in those days when it's all working for you. So it's probably, in my opinion, it's probably better to have limits the other way, because the converse is true. Your biggest losses are going to come in 20% of your days too. So something like a 3-hour daily loss limit would be a very good idea, almost an essential idea for insurance.
Yeah. Okay. Yeah. And no limits to in good days. You just
until it stops working. Okay, so where would I stop? I'd stop after a couple of consecutive losing trades after a very good day. There's no point in giving it all back. I'd stop at a maximum consecutive losing trades, 3 losing trades or a 3-hour drawdown. I would stop on a maximum weekly drawdown. If things aren't working for you in a system or in the markets, it's emotionally devastating to try and play catch up. It's just disastrous.
Yeah.
We've all experienced that. My system's not working. I'm out of sync with the markets. I've got a poor read on the charts. Just trade more. But what happens is that you take more trades at the time when your trading is at its worst.
Yeah.
Thank you, brother.
30 seconds left.
Period 1.
We are at P2 after the reset of the shot clock.
No, you're at P1.
P1, sorry, yeah, P1. Do we have new setups? I should first adjust the stop loss. To the high of that bar. A little bit lower even. And I don't see any new setups, no long setups.
Exactly.
No, I shouldn't adjust the stop loss because we didn't hit 1R.
Okay. So you're in a weird situation. So it hasn't made 1R, it's wiping out your profit.
Yeah, this is just waiting it out. Do you have time tomorrow at the same usual time?
Of course. Looking good. Can you send me this video, please?
Of course, yeah.
This
I
one is,
will.
this one is a really accurate reflection of where you're at. And,
Yeah, I think so as well.
I think we're getting very, very close.
Yeah, I think too. When I compare my trading of yesterday to today, there is a difference. But as I said, it's also because we talk and we have very useful conversations in between, and I wouldn't want to miss them. So I think it's a fairly good reflection. When I trade on my own, I'm more concentrated.
Yeah. But take into account that when we do it for real, it's going to be more difficult by definition. It's just
Yeah.
So it all fits in together.
Yeah.
All right,
You're right.
excellent question. I'm really happy with that.
Okay, me too, Scott. Thanks a lot for your time.
Bye-bye.
We'll send you the tape. See you tomorrow. Bye.
Bye-bye.